Okay. Boy, folks, we were right on time. That's good. All right, we're going to switch over to your financial 15, and we're going to talk about assembling your retirement team. So let me make some adjustments here. And this is the part where I didn't mention earlier, and I should have. I should have reminded you that our videos are broken up into two options that you'll find on YouTube. So you'll see the entire broadcast, and that's usually in yellow. I think I deleted it already, but I'd share it with you. But it shows the topic, and today's topic is assembling your retirement team, and it says Tuesday weekly webinar. And then we have another one that says the financial 15, right? Just the financial 15. Why didn't that circle? The financial 15, and then it'll say again, assembling your retirement team, and we have that in orange. So what that means is, no, we're not just duplicating videos. We take the last segment, just this segment, the financial 15, and create a separate video, because I realize that some of you may not want to hear me go on for the full 45 minutes and just might want to get to this topic. And if you want to do that, you can either scroll through the entire webinar and go to, it's indexed if you want to watch the whole webinar, which means it's kind of on that scroll. You can see that's the slider, or the tracking bar. You can see exactly where things come in, and it's also in the description. But the financial 15 is just this part of it, just this topic. And that is this week is assembling your retirement team. So let me get rid of that circle. So if you're just joining us for the financial 15, welcome to the financial 15. This week's topic is assembling your retirement team. And if you haven't already, please like, subscribe, and hit that notification button. If you subscribe and you want to listen to us live, then you can ask questions live. And if you're subscribed, then you certainly will get notifications every time we post a new video. We always like a like if you like the video, and love comments. So would appreciate them. So let's talk about your retirement team. So what is your retirement team? When you're planning for retirement, or even if, we talk a lot about retirement, but we've been working with a lot of younger folks in their 40s, but even when you're just kind of getting yourself together, right? You've been doing things all over the place, saving, you've been watching some things on YouTube or reading books, or just maybe you're working with somebody, but you're only getting a portion of what you feel like you should be getting. A lot of people come to us and say, I've been working with the same financial advisor for the last 30 years, and we've done great, we've grown, but I just don't feel like I have a plan. That's really common, because the majority of financial advisors out there are investment focused only. And we've talked about that before. Investments are a very, very important part of it. We spend a lot of time, resources, and energy around putting our investment portfolios together and making sure that they're optimized and doing exactly what they should be doing. But I have to tell you that most of the lion's share of the work is done in the plan, especially from a tax efficient point of view. So if you want this as you're getting serious. Now I say, I don't mean that in any demeaning way or anything like that, but when you're digging in and you say, okay, I've got, whether you're in your 30s, 40s, 50s, 60s, and if you're in your 60s, you're preparing for retirement, or maybe you're 50s, but you're finally saying, I really need to take a look at this. I need some certainty and I need some direction. That's when it's time to put that team together. That team should be there to help you succeed, and it should certainly be there to give you extra value. So there's a lot of do-it-yourselfers out there, especially from an investment point of view. And listen, it was pretty easy over the past 15 years to get some good positive returns. But I'm willing to bet you, even if you were a do-it-yourselfer, you probably gave up, a significant amount of money over that time just by doing it yourself and not having good financial advice. And I'm going to talk about, where the studies have shown there's a value there for good financial advice. But there comes a point when most people realize that, and they say, okay, I can't do, we just went through and talked about a litany of things in our analyst reports and the market reports about uncertainties in the market and where the market's going from here. And, we believe firmly that you can go find a video called The 3 Pillars of Investing that I do. And how do you manage all this uncertainty and growth in the markets, or slow growth in the markets, and funding your needs, whether they be retirement or just, your day-to-days, it is asset allocation. You say it with me: asset allocation, principal protection, and account segmentation. So they're the things that give us that certainty from an investment point of view. But where was I with that? But that's an example of what a good financial advisor can bring you, as opposed to doing these things yourself. Because we've had folks who say, I've brought this idea to my own financial advisor, and they say, I can't even get my arms around that, right? And certainly individuals point to that account segmentation all the time on the screen when I do it, or on the whiteboard, and they say, okay, I can't do that. I don't know how I would even put that together or figure out those components. But that's one of the things that we bring to the table as financial advisors. And this isn't a sales pitch for us, right? I hope that the right people find us, and it's a good fit for folks. And we're always excited to be able to help folks. But you've got to. This team should help you move forward with stability, confidence, and a level of comfort. And they should also, by the way, be able to show you financial value. So let's dig into it. That's why you should have your team. So what does your team consist of? So we talked about the why. So why is some stability. I don't know why that's there. Confidence. And I'll say comfort too, right? So, there's a lot of worry that goes into, I would just go back to retirement. When you're planning for retirement, the first few years going into retirement, and even the first few years during retirement, there's a lot of worry there. When you've got a team of experts working for you, they're all like-minded, they're all set towards your goals and working towards your goals, that gives you a level of comfort. It just really has to. It might take a little bit of time, but that's there's the financial benefit, and there's also that the feelings benefit, that feeling of comfort. So then who? The why, you have the why, and then you have the who. So I always like to do this as a circle. So let's draw your circle here. And you really need three key folks, right? And I'm going to say the first one is a qualified financial advisor. So, and in no particular order, you could start anywhere, but most people start here, honestly. There are certainly exceptions, but most people start with their financial advisor. But there's some things that the financial advisor should be. First of all, I believe that financial advisor should be a certified financial planner. So the certified financial planning designation is the most respected in our industry. It's also the most challenging to get from a planning point of view. It takes, I think, 5 or 6 exams just to sit for what was, when I took it, a 2-day, 11-hour exam. It's a 1-day, I don't know how many hour it is now, but it's just as difficult. 50 to 60 people who take this exam pass, depending on when they take it, right? And you not only have to show the material or learn the material, but you also have to show a high level of proficiency in the material. And it's very, very challenging. But why wouldn't you, in the scheme of things, why wouldn't you hire a certified financial planner? If it is, and it's also the only board certification in the financial planning industry. A lot of these other designations you see are put together by groups that really just generate revenue from them, if I'm being honest. That person, and as a certified financial planner, you should also be a fiduciary. So that is a really important topic, so everybody should know what a fiduciary is, and that is simply the best interest of the client, of the client. Number one, first, foremost, all the time. First, foremost, and all the time, you should be acting in the best interest of the client. So I always say, if you ask your financial advisor if he or she is a fiduciary, and their answer isn't immediately yes, if it's anything other than yes, the answer is no. If it's, well, we work in the best interest, we work towards the best interest of our clients, or we strive to work in the best interest of our client, that's not a fiduciary standard. So and there's a couple reasons that I recommend not working with the large firms, the Wells Fargos, the Morgan Stanleys of the world, any of them, because any broker dealer has a built-in conflict with their financial advisors and how they distribute advice. And they've been working against this best interest standard, the fiduciary standard, for many, many years. And I have a fundamental problem with that. So you want somebody who is absolutely a fiduciary. You also want somebody who can give you tax advice. So one of the other problems with so that should be a yes, right? Fiduciary, yes. Tax advice, yes. Taxes are going to be one of the most expensive areas of your retirement, whether you're managing them from a tax efficient point of view, or it's going to be even worse if you're not being tax efficient. But what did most of the large firms say? They write it on their statements. They write it on their reports. They say, we do not provide tax advice. They just wave it off. We don't do it. So one of the largest, one of the most impactful areas of your retirement, they don't get involved in. No, we don't give tax advice. That is, I'm not saying we don't, I'm saying that's what they say. So we are tax planners. We give tax advice. We don't do tax preparation, but we are tax planners. It's important. It's vitally important. We show people on a regular basis how it's hundreds of thousands, if not millions of dollars difference over their lifetime or at different times in their life, by making changes that are tax efficient. So if you don't think that giving proper tax advice, good tax advice, can make a big difference in a client's portfolio, or in your, not even portfolio, but in total financial plan, you're kidding yourself. So it drives me crazy that these folks say, we don't do that. We don't give tax advice. And the reason they don't is because it's very complicated. So I'm heading to the slot training event tomorrow. I'll be there for a few days. I think there's now 460 plus of us in the entire country. So I want you to think about that for a minute. So think about it this way. So there's hundreds of thousands. I don't know the number. I should have looked up the number, but let's just say hundreds of thousands of financial advisors out there. And I think it's more like 600,000 plus. Somebody can fact check me on that. 600,000 plus of people who call themselves financial advisors, financial planners, financial professionals. It's a very generic term. And then you get a smaller amount of those, who have some level of designation, right? So some level of designation. Like I also have it in a credit. I'm not only a certified financial planner, but I also have a designation of in credit investment fiduciary. That just means that I have additional training in the fiduciary process. This is something I teach to attorneys and other financial advisors. I'm doing it again where I'm cutting off my screen, aren't I? Sorry. So let me just show you and for those of you who are just listening, I'm writing on a whiteboard, and let me just go back to what I just realized I was cutting off with my little box of myself up there. So fiduciary, you want that answer to be yes. Do you give tax advice? Do tax planning? Yes. Now back over here, I was talking about the credit investment fiduciary. That's an example of another designation, and there's lots of them out there. So if your financial advisor has a designation, you should ask them what it means, what they had to do to earn it, because some of these you could get in a weekend. Really, I'm not kidding. And what the requirements are. The other thing about a certified financial planner is that there are ethics requirements. We have to have, we have ethics training and ethics. We have a pledge of ethics every single year, or every time we renew our designation, which is every 2 years, I believe. But there should also be an ethics requirement. So then you have your certified financial planners, and you see this number gets smaller and smaller. So it starts with hundreds of thousands. Much smaller amount has any designations. A much smaller amount are certified financial planners. And I think you want to deal with certified financial planners who are not affiliated with the big firms because of the conflicts I talked about. Remember, the big firms are focused on the value of the stock at the end of the day. That's really what those big companies are focused on. You want somebody who's going to be focused on your needs, the client needs. And then the smaller, as the pyramid gets smaller, you've got the 400 plus members of the slot group. Also, you want to get even smaller. It's the folks who are in the slot group and the Power Zero group. Now, these are very specialized, and I think there's a lot of value in the tax efficient plan that surrounds that. The membership and the allowance to be in that group. But you want to find the people who are well qualified, working towards your direction. Listen, if you want to invest in crypto, I'm not your person, right? If you want to focus all of your financial planning on making the maximum amount of money that you can possibly make, just darn the consequences and tax efficiency and passing it effectively if there's anything left, or spending efficiently. If you just want to earn the maximum amount and swing for the fences all the time, I am not your person. We are not your people. If you want to have a comprehensive plan that shows you how to be tax efficient and keep more of your money and have that stability, comfort, confidence, that's what we do. But if you're swinging for the fences and you want to find the best crypto arrangement or make as much money as possible, there are financial advisors out there who you can find. So you should find the people who fit for you. I think when you're putting together a good, solid retirement plan, part of the team should be a financial advisor that fits this mold. The certified financial planner should absolutely be a fiduciary. Let's just highlight these. Should absolutely be a fiduciary certified financial planner. Should absolutely do tax planning, and I think should be in one of these specialized categories, either Ed Slott's group. Listen, if you're focusing on retirement, nobody knows more about this area than Ed. And I love going to these programs, whether it's Dave's programs as part of the Elite Power Zero group or Ed's programs, because I kid you not, I am surrounded by the brightest minds, and it's not just Ed and Dave and their team, but the other advisors in the room. I learn something new every time I'm there, and that's exciting. And I often get to teach new things, and that's exciting too, to my colleagues. Okay, so that's your financial advisor, CFP, right? That's team member number one. And again, no particular order, but often this is how it rolls out. The second is a CPA. Let's say an accountant. So now I know a lot of you folks like to use TurboTax and things like that, but I have to tell you, I've never, ever, this is just my personal experience in 22 years in doing tax efficient planning. I've never had an experience where somebody hasn't worked with a professional who hasn't had better results. Whether it's, again, just the comfort of knowing that someone's there, but really even the financial results. I see all kinds of crazy stuff coming in. I talk to one of the, I have frustrating conversations with financial advisors for sure, who I think should know better. But my gosh, some of the crazy conversation, I use this as an example of somebody about a CPA who was telling a person who's a regular attendee on these programs that he could not make a contribution to a Roth IRA, even though the tax code clearly says he can, and wanted this person to pay a penalty ahead of time to make this contribution, which is one of the craziest things I've ever heard. But it doesn't even rank at number one because every single year I hear stories of accountants and attorneys too sometimes, but certainly accountants. So I think that accountant should be a CPA. And I think that accountant should, again, align with your beliefs and what you want to do. So if you're working towards tax efficient planning, that CPA should understand and recognize the value of tax efficient planning, but understand all the nuances around it. Like if your modified adjusted gross income falls over the phase out thresholds because of a Roth conversion, that still means that you can make a Roth contribution. And that's very specialized. But if you're choosing a CPA to help you, and that's the direction that you're going, you should have a CPA who understands that. You want a CPA because of all the same reasons that you want a certified financial planner. Education, proven proficiency, right? CPA exams are very difficult, just like CFP exams. So proven proficiency in that education. It's not all about education. People can sit in a class and hear something and then not be able to be proficient about it. So you want education, proficiency, and you want ethics. Same thing with CPAs or ethics requirements, and you want that. And there's an independent CPA board, all of those things. Most CPAs, so going back to the type of CPA you want that fits the mold of what you're trying to do, if you're working towards tax efficient planning, and if you're listening to this, it's probably your situation, you want a forward-looking CPA. What does that mean? Most CPAs spend the time looking in the rearview mirror. So I wish I could draw. I can draw pretty well, but I can't draw what I want to. That looks like just a car, but here's your CPA, and this is actually your rear view mirror. Let me see if I can pull this off. It's not bad, right? And this is where most CPAs live, right? This is your rear view mirror, because they look back at what you did last year or the year before, and they said, okay, well, let's do this. Or, hey, look, I trimmed a couple of things and I saved you a couple of dollars this year compared to last year. Therefore, I'm good at what I'm doing. Rear view mirror is not the only way to drive. You also want to be looking out the windshield and looking at what's ahead of you and focusing on the plan and being and managing those efficiencies before you're being reactive to it. I hope that makes sense. So you want the right kind of CPA. You definitely want a CPA. Please don't, if you're going to take this seriously, and you should take your financial situation seriously, and you're developing your team, hire a CFP. Hire the right CFP who specializes in the type of planning you want to do. And if it's tax efficient planning, tax efficient retirement planning, they have to be part of the Ed Slott group. They just do. I encourage people all the time, other financial advisors all the time. You got to join this group. And the fact that there's not 600,000 as part of that group instead of not even 600, 460 some, it just astonishes me. But find the right financial advisor. Find the right CPA. For all these reasons: education, proficiency, ethics. You want somebody who's forward-looking, who has a planning mindset, forward-looking, that says. And then last is your attorney. All right, attorney. Let's do this like this. I like the bubbles. Bring this down. Yeah, I got bubbles up there. Okay, so attorney. So you may just need estate planning. I'll tell you that most people, I'm finding that almost it doesn't matter any. So I was talking with clients yesterday who live in Missouri, and they're 40 some years old, young. They want to retire, and they need an elder law attorney for their estate work because they both have parents who are alive, and their parents are in their 60s. So at some point, their parents are going to need some potential help, and whether they may not need their kids' help, but their kids may be involved in the process, and they may, in this case, they're likely to be involved in the process, and they may also need the assistance of the lawyer. So if you're going to have a lawyer establish your documents and your estate plan and all that, plug in an elder law attorney if you have parents who are still with us, or folks, if you may not be considered elderly now, but at some point, hopefully you are. So develop that relationship now before you need it. You've all probably heard the example I had with my own mother. We struggled with getting her from a hospital to a rehab center. We called her attorney. We worked on this for several days with the hospital. The hospital was given this runaround. I learned after the fact it has to do with the compensation, of course, they get for the type of situation she was in. And after days of frustration, I called the attorney that I introduced my mother to and had put together her documents and her plan, and it was all rectified within 20 minutes. That's the kind of relationship you want when things are difficult. But you don't want to wait until things are already difficult to develop that relationship. I hope that makes sense. So you want an estate attorney, of course, to set up. Please don't use LegalZoom. Please don't use the Susie Orman binder or whatever. These are serious matters. Take it seriously. Yes, there's costs involved. Oh, I have to get back to, I don't have time, but unfortunately, but anyway, I'll just mention it in a second. But and you may need other attorneys. If you've got a business, you may need a business attorney. If you own real estate, you may need a real estate attorney. If you have employees, you may need somebody who focuses on employees. You just want to make sure it's the right person for your situation and have the very best. Don't mess around. Don't go for cheapest. Take it seriously. Okay. And also, this needs to be a specialization. Now, I don't think attorneys can say specialization or specialize, but I can. So you want somebody who specializes in the area of estate planning and certainly elder law. You don't want your brother-in-law who works, who's a corporate attorney or the person who, can also help you with the slip and falls or get you out of the parking ticket or speeding ticket. That's not your attorney for this. You want somebody who specializes. Now I'm going to say, let me just look at my notes. Okay, I think I covered everything, but I do want to come back to one thing regarding financial advisors, and this is to the do-it-yourselfers. So this is an often touted study. This is the Vanguard's what we call alpha study. And Vanguard has said that, we all like and trust Vanguard. That's good. I used Vanguard in some of my investments. Most of us like Vanguard and respect them. Vanguard says that a good financial advisor can add about 3% to the value, that should be plus 3% on an annual basis to the value of a portfolio. So that's good. So you do-it-yourselfers, you're giving up that potential 3% a year. And a lot of financial advisors tout this on an ongoing basis. But what they don't do is they don't get into the weeds of the study. So you have to pay. This goes back to hiring the right financial advisor, because just a suitable asset allocation, I'm up here, using broadly diversified funds and ETFs, which is what most financial advisors do, actually adds about zero value. So basis points is a percentage. So when you see 30 basis points, look at it like this, 0.30%. So 0.14%. Cost-effective implementation, so having your asset allocation and then it being cost-effective, well, that can add 0.30%, so that's good. Rebalancing adds 0.14%, but that can be pretty well automated. Behavioral coaching is a big one. Telling people when how they should be allocated, when they should if they're having a difficult time in the markets and they're doing things, like the Fidelity Magellan Fund returned, it was something like 12% over the life of their fund. It might have been higher, it might have been 14%, but your average investor earned 3% famously. And the reason is that they're always in and out. So that behavioral coaching is one of the things. If you have a good plan, it'll help you stay engaged and you won't be as capricious in your investment options. And that ranges all the way up to 2%. A good asset allocation ranges from 0 to 0.60%. That's what that is. A spending strategy or a withdrawal order. This is another huge one. This can go all the way up to 1.20%. And the way, certainly the way we do it with account segmentation, I think adds more value than that. And then total return versus income investing is just about 0. So you can see you can up to or even exceed 3% in net returns. What they don't talk about is tax efficient planning. And I'd love to get a quantification on that because that's just a huge number, but well above that. So for you do-it-yourselfers out there, just consider these things. And if you're working with someone, I hope I didn't cut myself off. It's pretty good. If you're working with somebody that's only doing this suitable asset allocation using broadly diversified ETFs, it's not adding any value to your situation. You want good tax efficient planning. You want true financial planning, comprehensive planning. Anybody who's been through our financial planning process cannot argue that it's not comprehensive for sure. And you want this. You want all your folks to be fiduciaries, but certainly your financial advisor to be a fiduciary. All these folks have fiduciary requirements, by the way, and they should take them seriously. I told you I teach attorneys on a regular basis fiduciary process, and it's important. So you want these members of your team. We talked about why you want these members of the team, and you want them all working together for you. You want them all communicating. It is not uncommon that I'm having conversations with clients' attorneys, CPAs, sometimes without the client, just coordinating what we're doing. Again, often, I'm only speaking from my experience, we are the ones kind of driving the wheel here and keeping everybody engaged. Attorneys are typically reactive. I know one good attorney in the greater Philadelphia area here who reviews their clients' estate and plan every single year. you know, if you've been listening to me, that it's very vitally important to review your financial plan every year. There's only one attorney I know who does that on his own without it being a reactionary thing. What do I mean by reactionary? Most attorneys, they'll do something when you pick up the phone and say, hey, I got a problem. That's okay as long as you got somebody else. And usually that's the financial planner, financial advisor leading the charge here and keeping everybody engaged. And that accountant shouldn't be afraid to work through the plan throughout the year. Yes, often you get billed for that time, but folks, it's worth it. So financial advisor alone, per the Alpha study, can add up to 3% or more. Tax efficient planning adds much more, in my opinion. But plugging in these other professionals to work for you, everybody's got to be working for you, is going to add much more value financially, but certainly your confidence, comfort, and stability for sure. All right. I hope that was helpful. That, folks, is the program for today. Let me get back to just me. There's just me. That's the program for today. Looking forward to seeing you soon next week at the slot event in May. If you have any questions, anything I didn't answer, anything you want to discuss, anything you'd like to hear me discuss, shoot me an email. If you need to make an appointment with us, the best way to reach us right now, because my calendar is packed full, is to reach out to us at admin@attleborowealth.com. That's admin@attleborowealth.com. If you haven't already, hit the subscribe, like, and notification button on this YouTube video. And other than that, have a great day. Have a great week. Take care.